All right, so what's going on, people? All right, now we're live. All right, so we're gonna pretty much be back testing, just GJ, seeing what's going on. Just reviewing the market. So I can't really remember all the trades I took. So these are some of the trades. Let me see. Okay, that didn't play out. Another buy opportunity. I think this is the same trade. Yeah, that's the same exact trade. Sells. Okay. What is this? GU? All right, we can delete that. All right, so right in direction, trade stopped out. I believe I re-entered. Okay. All right. So we pretty much reviewed everything. We can pretty much see what's going on here. All right, so gonna go back to the market. So pretty much what I like to do is after every week, just kind of just reset. So I'm just gonna delete everything on my chart and click on this to go back to my original template. And since I only favorite my 1 hour, 30 minute, 15, 5, and 1 minute, um, we're gonna have to go to the top down analysis, go into higher time frames, right? So I have both. I have two GJ charts. I have one for Owanda. This bottom one is Owanda, and the top one is FXCM. I usually use FXCM as my main chart that I'm trading on, and then Owanda is just like a backup chart so that I can just kind of get a second opinion on the market without looking at my trade setup. So I can just have like a clean bias on like what price is doing really, right? Um, so what I like to do first is I like to use Awanda's chart for breaking down the market in zones simply because there's no gaps. Like if you look here, you can see like the gaps and stuff. Um, and it just makes things a little bit more hard to see. It's a little bit more choppy versus here. Things are a lot more cleaner. It doesn't really show the gap. So that's the reason why I have it. But pretty much what I'm gonna do now is just do a top down analysis. I just want to see um, what price is looking like, what we can be doing for next week on GJ. I only trade GJ, so yeah, let's break it down. So we're gonna start off the weekly. All right, so we can see that price was sitting at this demand zone, right? So we have this whole area of demand that price rejected off of, which created this higher low position. So pretty much this whole last week, that's what we were looking for, is just looking for buys pretty much for about 400, 500 pips. Pretty much last week was just a 500 pip push of just straight buys, just looking for straight buys, just buys, 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 buys. So we can draw out as that key level of a zone that we're going to be looking at. So what we also see in the weekly time frame is this support that's now turned as resistance. So we can highlight that area, right? And our next zone I'm looking at is this zone right here. This is another key level in the market that price has tested it multiple times. So you have one touch, two touch, three touch, four touches. So now these are my major three key levels that I'm looking at for GJ. I don't really, I mean, you could put a zone at the top here, but realistically, price is probably not going to come that high next week. Um, so that's pretty much what I will pretty much are doing. And my gray zones are hard time frame zones. Gray zones are hard time frame zones, right? So now I'm just going to drop down to the daily time frame, see if there's anything that I didn't see in the daily time frame that potentially could I potentially could see on the daily. And pretty much what I'm doing now is just cleaning things up. Just cleaning things up, right? I just want to I don't need to have the zone be too big. This is literally 70 pips, 50 pips of a zone. That's just, in my opinion, you don't need to have it that big. So just clean it up a little bit. All right, so now that I see these major key levels, now we can drop down to the 4 hour and see if we see anything else. So now I'm seeing a support that's not turned as resistance. So I'm just gonna copy. I'm gonna clone that, and now you have another zone right here that I'm looking at, that I'm seeing. Now, what I'm looking at here, noticing that there's a support level that's closer than here. So what I've noticed is that price reacts to the most recent price. So let's say you have a support right here. Price a lot of times is going to react to this before it reacts to this. So because that's the most recent form. And I'll break that down as well on like a lower time frame to see more what I'm talking about. But when you go on a daily time frame, a lot of times you'll see how, like, okay, price is sitting at this, there's a support, and then let's say you put your zone here, but price breaks it and then closes below. A lot of times because there's like a higher time, a lower time frames key level, like right here, that price is actually reacting to. Um, so now these are like my major key levels that I'm looking at in the market, right? So if price breaks above here, then I'm looking for a target here. That's 100 pips. If price breaks up here, then I'm looking for price to come here for another 150 pips. And then if price breaks here, then obviously we'll just be drawing out. Which we can, you know what? Let's just do it here. We're gonna draw another zone right here, and let's go to a line chart, and we're gonna put it right there at the close of the actual candle on the 4 hour. So now these are the major zones that I'm identifying, looking at on GJ. Now, if we look at the past 5 days, 1, 2, 3, 4, 5, we can see that all of last week was just buy opportunities. It was just straight buys, right? So if you go on the 2 hour time frame, 1, 2, 3, 4, 5, so hourly time frame, you can see how from this is Monday, right? This is Monday, this is Tuesday, this is Wednesday, this is Thursday, this is Friday. Now with the trend trader strategy, these are my settings. It's 50 as the length and multiplier 1. It just helps you identify the trend. So if the hourly time frame is bullish, then all the candles are going to be bullish, right? And the style I have set as my bearish candles are black, my bullish candles are orange. That's just the colors I always like. I've been using those for years. You can make those whatever you want, and then I uncheck this one. I don't really know what this third one is, but I just uncheck it. I just put the opacity to 0, and this is the indicator. So to search it up, and it's called Trend Trader Strategy, and it is by H. Potter. And it's an indicator, but it's really not. All it's doing is just helping you identifying what you should already know, that the market's bullish, right? I do use SMAs, but I haven't really, just because the Trend Trader Strategy is better in my opinion, because if I know that the 1 hour is bullish, right, based off with price is telling me, also with the confluence of this indicator, then I don't really need to look at the fact that we're trading above the 50 SMA, because as I'm scaling between time frames, I may overly use the SMA, right? So what I mean is I may be on the 5 minute, and then I may be like, okay, I see a break of structure, I see sells, and then I enter here, and and focus too much on the SMAs instead of focusing on what price is telling me, right? Because if I focus more on one price, then maybe I'm like, all right, well now I'm just waiting for, let's say I do see a sell opportunity, right? Based off the higher time frames, price is sitting at this supply zone, and I'm seeing a potential sell opportunity. So let's say I'm on a 30-minute time frame, and I see that price has failed to create a new high. So now price is exhausted, right? So I'm like, all right, for New York session, most likely we're going to see reversal off the previous day highs. So now what we're going to do is we're just going to wait for a minor time frame break of structure, which is right here. Minor time frame break of structure. You have a higher time frame confluence, which is a failed to create a new high, close below the previous high, at a major key level in the market. And now scaling down to the 5 minute, you can clearly see that price is not breaking structure and giving you that multiple time frame confluence entry point right here. Stop loss you can have at the previous high, or just give yourself that little bit of wiggle room. Let's say 20 pips, and then you just target price action, right? Price action. Just target it, previous structure, TP1, and then let's say clone that's TP2, and so on, etc. right? So this is pretty much what I do overall. That's a 1 to 5. And again, on the lower time frames as well, on the 4 hour, any key levels that I see, I'm marking those up as well. So if I see a support, if I see a resistance, that's now forming a support, and I see multiple touches, you have a touch here, touch here, touch here, like touch here, touch here, touch here, touch here, touch here. So what I'm going to do is I'm going to just basically draw out that zone. So now that zone right there is a key level that I'm going to be drawing out for next week. So if I see price next week hit this zone, and let's say I see price hit this zone, let's say I see price hitting this zone. So price comes down and hit this zone, and I'm looking for potential continuation to the upside. I want to see the lower time frames break structure. All right, so now you guys can see me. For people who want to actually see me, I'm not too sure, but so now you're seeing the lower time frame chart. Also, anyone who's in this Telegram who wants to actually communicate with me right now, go on my YouTube channel. It's in my description on this actual live stream. My YouTube channel is SleazyFX, SLZYFX, and then if you guys are watching on YouTube, click on my Telegram. Right, click on my Telegram in my YouTube channel bio, and then there's a Zoom link. You can join that Zoom link right now to completely talk to me right now if you want to. And again, just join my YouTube channel, SLZYFX. SLZYFX. That is my YouTube channel. If you guys want to join, click on that video. Click on my most recent video. I have my Telegram in my bio. You can watch my description on my videos. You can talk to me. You can join my Telegram right now, and then we can kind of, you know what I'm saying, be able to kind of more review if you have any questions. But anyway, so I'm seeing this point of support right here. So I'm seeing this price right here. I'm also seeing price right here, right? I'm also seeing you have a touch, you have support, and then you have resistance. For price, so for you to identify a very key level in the market, you want to see price touching it on both directions. You want to see resistance and support being tested multiple times. And that's what we have here. We have a support, we have resistance, support, resistance, 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 support. So you're having multiple levels. What's going on? So there's multiple levels at that point. So for next week, let's say price breaks below this level, hit this support, and price ends up it's looking to be bearish, right? What I'd be essentially looking for if price is going to be continuation to the downside, which honestly, price is probably going to do its thing by the time London session opens up. But let's just say price doesn't, right? This whole move from here to here is like 70 pips. So let's say you're on the 5-minute time frame and price is bearish. Price closes below this low. I want to see price react to this level. So I want to see a break of structure, the breakout. Then I want to see price retest. I'm not entering on the retest. I want to see price break structure off the retest. So then I want to see another break of structure, and then that's going to be my entry point, because that's my confirmation that price wants to continue to go lower and it's not a fake out. And then I'm going to put my stop loss, let's say right here, and then I'm going to target the next form of support, right? And then let's say price breaks that level, then we'll be targeting another level, right? And we'll be targeting another level. So that's pretty much what I'm doing. Testing, 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 1 2 3, testing, testing, 1 2 3. Okay, so I don't know if anyone can even hear me. So that's pretty much what I'm doing. All right, so let's say so Monday, right? Let's review Monday. Let's do this. Let's go to GJ. We're going to change this to black. Click on that. We're going to add that. So now we can look at multiple time frames at the same time, right? So this is 1, 2, 3, 4, 5. So Monday. So this is Monday, and then we're going to add the crosshairs, date range the same, interval, well, not the same time interval. So now we can look at the charts and look at both time frames at the same time to see what price is actually doing, right? So yeah. So this is the 4-hour time frame, and then this one on this side is going to be the 5-minute. So I'm just going to show you guys pretty much what I'm doing. All right, so let me make sure this is the 4-hour, and then this one's the 5-minute. All right, so you see how actually this one's the hourly. My fault. All right, so you see how this is Monday. So the higher time frames right here is bullish. Price is bullish. Price is sitting at this support level. We have this zone, that support. That price is telling me that price is now bullish. We was in a downtrend, now price is in an uptrend, and now price is looking to go to the upside. That's what the 4-hour, that's what the hourly time frame is telling me. So if I'm scaling down, I'm looking at London session, I'm looking for a potential entry. What I'm looking for, right? If I know that the higher time frames, now we can just go back to the regular chart. Now that I know that the higher time frames is actually bullish, right? What can we look for? Right, we're going to be looking for that break of structure. So we're going to be seeing, okay, price is pulling back, price is pulling back, price is pulling back, price is in a downtrend, price is in a counter trend downtrend on a 5-minute time frame. All I'm looking for is a minor time frame break of structure. So now when I look at price, right, and I scale down to, let's say, the 3-minute time frame, right, let's say if we see anything, we don't really see much. I see it because it's right here. This high closes above this high, that's my entry point. But in order for you to see it, you have to go on the 1-minute time frame, and that's your opportunity, right? So this is what I do. I want to see what the higher time frame bias is. If the higher time frames is in an uptrend, so if I go in the hourly time frame and I'm seeing that price is pushing up, price is in an uptrend, price is creating higher highs and higher lows. What I'm going to do is when I scale down, okay, hold on. Okay, I was scared all my zones were gone. So what I want to do when I scale down to the lower time frames is I want to look for that break of structure. So we know that the higher time frames is bullish, right? We know that the higher time frames is bullish, and this is what you want to do, right? There's no point in buying the market if the market hasn't broke structure. So if the higher time frames is in an uptrend, why would I buy the market when the price is currently bearish? If the lower time frames is bearish but the higher time frames is bullish, why would I buy the market? Casey, what's going on, man? So if the lower time frames is bearish but the higher time frames is bullish, why would I buy the market? Makes no sense. It makes zero sense for me to buy the market when price is bearish, right? So if the market is in an uptrend, right? If the market is in the higher time frames, if you go in the hourly time frame, this is like I'm telling you, if you guys can understand this, you guys would be golden. If you see that the higher time frames is bullish, you go in the 30-minute time frame, you see that the market is now in an uptrend now. We hit this major key level and now the price is pushing up. If you see, all right, if you look at the price now and you're like, okay, price now is right here. 5 hours tomorrow, let's say you're betting, let's say you're playing a game of options, right? And you project price is going to be higher or lower 2 hours from now, right? So picture this as a 15-minute candle. Every candle is 15 minutes. You see prices right here, and you're like, okay, is price going to be lower or higher in 2 hours? If you project price is going to be higher, then okay, you see the market being in an uptrend. You see price creating higher highs and higher lows. You see it being in an uptrend. That's the best way I can simplify. Like if you project price is going to create higher highs and higher lows, there's no point in buying the market just because you think price is going to do that. Wait for a price to break structure in that directional bias on the lower time frames. That is going to be your confirmation. So not only are you buying the market because you think it's buys and you think because the higher time frames is telling you, but the lower time frames have now reassured that bias because now we had a counter trend move that price was selling off. Now, if price wanted to be continue to be bearish, why would we break structure, right? That's like going east just to go south. That's like saying, yo, I'm gonna go all the way to I'm gonna go on a road trip. I'm going from New York all the way to California. But first, we're gonna go to Florida first. It doesn't make no sense to go all the way down south to Florida and then go all the way west to all the way go west uh to California. Why go south if you're just gonna go west? It's a waste of time. You see what I'm saying? It doesn't even make sense. So if the market is showing you that the higher time frame is bullish, and now the lower time have broke structure, and there's the reason why I said get this indicator because again, it's going to identify you when the structure is broken because the candles are going to change colors. So if you can't identify structure that well, and you need a little bit of a help, then get the trend trader strategy, right? It's just a free indicator that I fucking found. All I did was search up trend on fucking indicators and I would just scour the fucking indicators for hours. And this is the one I found and it's really fucking good. And again, these are my settings. The top one, the bearish one, I have black. This one is orange. And then my inputs are 50 is the length. And then the multiplier is 5. And then these are my time frames that I like correlating it with it because again, if I'm not looking for a break of structure off the 5 minute, then I'm looking for a break of structure off the 1 minute. I'm going to completely scale down to the 1 minute. All right. And again, what do you see right here? You see a high, you see a lower high, you see a high, you see a lower high and a lower high. All you have to do now, you see that the hard time frames is bullish. You see that GJ's in an uptrend, right? All you're literally doing is waiting for a break of structure. Soon as you get that break of structure, that is your indication to buy the market. So this is where I entered. Your entry points are always going to be based off lower time frame structure. Your exit points is always going to be based off higher time frame structure. Entry is lower, exit is higher. You're entering off the lower time frames. Your exit point is based off higher time frame structure. The reason why it's always based off higher time frame structure is because if you're with the trend, ride the wave. See where the market's going to before it slows down, right? So if I scale back up to the 30-minute time frame, then I'm like, all right, well, I caught the entry of the move. Now where's the exit? So now you're like, all right, this is where I see price going to. Why do I see price going here? Because that's where the higher time frame structure is. So now you see a high, you see another high, so you see a double top. So now you can draw out this zone right here and be like, all right, that's where my take profit is going to be. Your take profit is going to be based off this higher time frame structure, right? Again, you can see that the market has tested this level multiple times. Touch, 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 touch. So again, that's a great area to have take profit. And that's going to be pretty much my only target. Now that doesn't mean I won't close out earlier, but that's just where I'm going to be targeting. My entry is going to be based off the lower time frames. Now again, why is this a high probability setup? Because GJ's and an uptrend. You don't need indicators. You don't need the SMEs to tell you this because you have the trend trader strategy that can influence that. They're orange, right? You got to think this indicator is reacting off price. So if it's orange, even if you don't understand price action that well, if you see that this is black or this is orange or whatever colors you decide to pick, then just go off, okay, the hourly is orange. This means it's in an uptrend for people who are just starting out and don't understand market structure that well. I don't need it, but it's a better confirmation because it tells me what the actual structure is, right? So now I'm like, all right, the 1 hour is bullish. So now I'm looking for buys, right? I'm leaning more towards buys. So all you're pretty much trying to do when you get on the market is see what are the what is all the information for sells and what is all the information for buys, right? And imagine this is the analogy I gave years ago. Imagine you have two employees, right? You're trying to pick no. Imagine you have two players. You have one player that's really good at selling, another player is really good at buying, and you both can make money. He can equally make money on the sales. He can equally make money on the buys, but he has to be the right one for the job. Order for order for the sell person to make money, the market has to be selling off and he'll make the money. If the person wants to buy the market, and they have to convince you why you should put them in. Put me in, coach. So you're the coach and you're trying to put in that player, right? If the person that's going to buy the market is giving all these confirmations, he's telling you, look, the reason why you should put me in and you should take a buy and you should look for buys is this: price is sitting at a major support level, right? Price is sitting at a major support level. That's one reason, coach, that you should put me in for buys. Another reason, coach, is that the 1 hour time frame is bullish. The 1 hour time frame is creating higher highs and higher lows. That's another confirmation that the buy player is telling you. So now you got two confirmations. We're sitting at a major support level. Prices creating higher highs and higher lows. Prices at a major key level, right? Now, we have higher time frames being bullish. Then we're sitting at major key level. That's two confirmations. The third confirmation is that you have lower time frame breaker structure based off the higher time frame confluence. That's three confirmations, right? Now, what is the confirmations for sales? There is none. He wouldn't be the person that the sell employee couldn't give you not one confirmation to reason why you should buy the market. The market has broke structure. The market is no longer in a seller's market. So he can't tell you that we're looking for sales. He made money this day, this day. He made money these 2 days, and this day, yeah, he could have told you to sell me here, 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 but that was it. Now it's time for the buyers. The reason why is because we broke structure, right? We broke structure. So the sell employee can't really give you a confirmation to buy the market, so you don't buy it. So now you're like, all right, I'm gonna put you in, but I gotta put you in at the right time. I gotta time the market now. Now you've been convinced that it's a buy because he gave you three confirmations to buy it, versus the seller employee couldn't give you not one. So if the buy employee, the buy player, right, gave you three confirmations, right? Let's say he's on the left side, he's trying to convince you to buy the market. He's trying to convince you to sell the market. If he gave you three reasons, valid reasons why you should buy the market, and he gave you zero reasons why you should sell the market, which one I'm going to listen more to? I'm going to listen more towards this person, right? And I'm just trying to give you an example. All this stuff is going to obviously be in your head because you're going to be the one choosing, but you got to think, what are the confirmations for buys? What are the confirmations for sells? Now I'm seeing three confirmations for buys. I'm seeing zero for sells. So again, now the two confirmations is what's going to make me choose him first. So let's say he gives me two confirmations, right? He says that the higher time frame structure is in an uptrend. So the higher time frames is bullish. That's one reason, but that's not enough for me to put you in. Because the 4 hour can be bullish, the 1 hour can be bullish, but we could be selling off. We could be at a key level in the market. We could not be at a support or demand zone. So if we're not a demand zone, or we're not a support, or we're not in an area where price can continue to go higher, then I might sell the market even though it's in an uptrend. Prime example here. Price is at a major resistance point that price could react to. So why I can't buy the market right here? Because I won't make money. So I need two confluences. I need to see price at a major key level in the market. Price is at a major key level, right? Price is at that major support level right here. That's been tested 1, 2, 3. So you have a support that's now been tested at resistance. That's been tested as resistance that came up. That's now being tested as support. So it's been tested in multiple directions as support and resistance. So that's a major key level. Now he's gave you that indication and also gave me an indication of the current trend is bullish. Now all I'm looking for to put him in, to put it in as a buy, is to break your structure towards the uptrend. So I want to see the market be bullish. So we now have those two hints that the market wants to be bullish. And again, if the market is going to go up 200 pips, right? The first time frames to break structure is the 1 minute. Please understand this. The first time frame that's going to break structure is the 1 minute. So if you know that the higher time frames is bullish, if you want to be the first person to get in the market, you have to look at the 1 minute. You have to look at the 3 minute, the 5 minute, because those, the lower the time frame, that's the ones that they're gonna be first in line. They're gonna be first to break structure. The 1 minute is gonna break the 1 minute structure before the 15-minute structure. So if you look at the 15-minute time frame structure, the last high was here. The last high, lower high position on the 15-minute time frame is right here. The last high on the 5-minute time frame is technically right here. Price breaks the 1 minute time frame right here. So you could have entered right here off the 5 minute, but why enter here when I have the 1 minute confirmation right here? So again, this is what I'm talking about. Look for the higher time frame bias. If you see that the market's in an uptrend, right, then two, you want to look at if it's priced at a key level. Is priced at a resistance point or a supply zone? If you don't know what supply is, go on YouTube and search it up. You got the whole weekend right now. So that's your homework. Write it down. If you don't know what supply is, well, you go back to your settings on the Trend Trader. Yeah, I can show you right now. So these are the settings. Screenshot this. The length is 50. The multiplier is 5. And again, for these specific time frames, you want to be looking at the 5 and 1 minute. Don't look at the 2 minute, the 3 minute. You can, but it's better that you just look at the 1 and 5 minute specifically because it's better designed towards that. I've noticed. So look at the 5 and 1 minute. If you don't see a 5 minute breaker structure, then look for a 1 minute breaker structure. If you don't see a 1 minute breaker structure, then don't enter the market. So for example, let's say price is at a support level, right? Price is at the support level and you want to take buys. Instead of buying it here, because again, price could break this zone. Price is at the support, but price can break that zone, no problem, man. So price can break that zone. There's no proof that just because I draw a zone and price is sitting at it and price retested it multiple times, it's not enough for me to be like, oh, price won't just drop. Price can still just break and retest it. So why enter the market if the 1 minute didn't break structure? Waiting for a 1 minute break of structure can only be me waiting another 15 minutes. I can wait another 15 minutes and turn the setup from being a C quality or B quality setup to an A quality, high quality setup, right? So instead of buying here, right? Instead of buying here, let's say instead of buying here and then being an immediate drawdown of 6-7 pips and putting a random stop loss that can get hit because again, that stop loss is based off nothing. That stop loss is based off no structure. You're entering while the current 1 minute is bearish. This is not a high probability setup. Yes, you're sitting on a major support, but that's not enough. Wait for the current time frame to break structure. Now you see the minor time frame breaking structure. Now you see a high, you see a lower high, lower high. Now you see this counter trend line that's been broken, retested. You see that prices broke structure off the support. So you have a support that's been broken off the 1 minute time frame. Price is now creating a new high. So now you have multiple forms of confluence, and you have price trading above this 50 SMA on the 1 minute time frame, which I don't really use anymore. I mean, it's still confirmation, but I don't really use it. But I still have it just in case. But I uncheck it. So now you have those three forms of confluences. Now you enter the market here, and then you put a 10 pip stop. Right? I'm putting like a 10 pip stop loss, and then I'm going to target again lower time frames. My entry is based off the lower time frame. My exit points are always based off the higher time frames. Entry lower, exit higher time frames. Because again, if you're on the 1 minute time frame you entered, right? Why would you get out the market for 20 pips? Because that's where this high is. This doesn't make any sense. Makes no sense to exit out the market for 17.6 pips. Just because you have a 10 pip stop doesn't mean I need to only go for 1 to 2 or 1 to 3. Because again, if I'm sitting on a major zone and the market is going to be going up, it's going to go up. If it's 1 hour structure for more than 17 pips, it's going to go for 80 pips, 100 pips. So look what the higher time frames is at. Boom, price is at this major resistance point. That's a 1 to 8. Boom. The next day, we're going to repeat the same thing. The same exact process. So we're going to see, okay, the market is still in an uptrend. So first thing I'm going to do is I'm going to look at that 1 hour trend to see, okay, we're still bullish. So I'm gonna be looking for buys, right? So again, I'm gonna scale down to the 5 minute time frame, and I'm gonna do the same exact thing. I want to see, okay, the market is already bullish. There is no counter trend. Price is already creating higher highs and higher lows. So now we have lower time frame and higher time frame confluence, right? The 5 minute is bullish, just how the 1 minute is bullish. The 1 hour is bullish. So you already know you have multiple time frame confluence. So now you don't even have to wait. All you have to do is look for an entry, right? So now you look for your supply and demand zones. You look for 5 minute demand zones, right? How do you find supply and demand? 50% of the last high and low that got broken is supply and demand. 50%. So if you see a high, if you see a low and you see a high, 50% of that last break of structure is supply and demand. So this is demand. Demand means buy, supply means sell. Supply, sell, demand is buy. So supply is sell, demand is buy. Supply, sell, S, sell. Remember that. So, and go on YouTube and search it up. So now you see this demand zone. You see 50%. So if I draw a Fibonacci from here to here, 50% is right here. You see that? 50%. If I use my other Fibonacci, it's right in the 50%. This whole highlighted area is demand. That's where you can get your entry. Stop loss is going to be at the previous low. 50% of the last low and the last high that broke structure is demand and supply. I'm going to repeat that a million times until you guys get that down. That's all supply and demand is. 50% of the last low and high that got broken is supply and demand. So if it's in an uptrend, we're going to be looking for demand. And let's say this one breaks, then we're going to go down to this one. 50% of this last low and last high that got broken is demand, right? Jesus, sorry, there's like gnats and stuff on my screen. So let's say, so I'm going to show you another example right here. You have a low, you have a high. 50% of this move, right, is right here in the middle. Look where price pushes up from. 50%, because what? That is demand. So from this low to this high, 50% is exactly where price goes. But again, in order for it to be a valid demand zone, price has to break the previous high. If it doesn't break the previous high, a price, let's say, pushes up here and then comes down, that is not a demand zone because this price did not break above the previous high. It's an invalid demand zone, right? I'm going to keep showing you guys examples. This is another example of a demand zone. Why is this an example of demand zone? Because this high is higher than this high. So when price comes 50% of the last low and the last high that got broken, that's demand, right? So when price comes to this area of interest, this is your entry point, this is your stop loss, and then boom, price ends up taking off. All right, so now let's say you got in right here, 50% of this last low and high. So now let's say you're like, all right, I see it. You marked up your Fibonacci from this high, from this low and this high. Now, if you guys want sauce, if you guys want this is my Fibonacci fibs. This is how I catch. This is how I identify supply and demand, right? So if you guys want these settings, these are my settings for it. So screenshot this, screenshot it, do whatever you got to do. These are my settings. And I'm going to show you guys how to use it. I'm putting y'all shit on sauce, bro. I'm putting y'all on game, bro. So take your time, screenshot this. Just screenshot it, take a picture, do what you got to do. Let me give you a little bit of time. And I'm going to show you how. So all you got to do now, once you got that, I'm going to show you how you use it. So before you do that, you want to save it and save it as a different fib. So if you guys use regular Fibonacci like this, that's great. But I'm going to show you how to use these to catch supply and demand zones. right? So now that you got those and your chart's looking like this, right? Now you have your chart looking like this. If you guys want, you can highlight this, the middle, you can change it to be gold. Let's say you want it to be gold now, or orange. So now you guys can just highlight this whole area, right? Um, so you guys can focal point on that area, 38.2, right? So like when price comes to this zone, boom, you're gonna snap in on it. So again, I want to see price break structure. These are my take profits. These exit points, TP1, TP2, TP3, and TP4. These are how to catch. You only look at GJ? Yeah, I only trade one pair of GJ. And I only trade London session. I may trade New York, but it's rarely. So now look, you have this demand zone. Your entry point is there. Exit point is gonna be what? If I entered off the 5-minute, my exit point is based off higher time frame structure. I'm gonna keep saying this shit till y'all get it. So now we're looking at the market. Be like, all right, we're gonna target 163. 163 is our take profit. Why is 163 our take profit? Because that's where this resistance is at. 163, based off the higher time frames. So that's a 1 to 8 risk reward. 2 1 to 8s caught back to back. Yes, you got a lot of back and forth, but if you held it throughout the whole thing, that's a 1 to 8. Now, if you didn't catch the whole thing, you just wanted to catch a piece, that's a 1 to 3. Same exact thing, guys. Again, the higher time frame structure is what? For the next day? Now we go on to the next day. The market is still in an uptrend. So now we see what? Hello. What is this, guys? Demand. Why is this demand? Because it's 50% of the last low and last high that got broken. So if I draw my Fibonacci from here and here, what did price do? Price is in an uptrend. If it's in an uptrend, look for demand. If it's in a downtrend, look for supply. I'm gonna highlight this area so I know this is an area of continuation based off the higher time frame. So all I'm looking for is a lower time frame breaking structure. Now price ends up consolidating to where you would have to put your stop loss below all that area. But this is an area that I had to this is where I got stopped out and then I re-entered right after this push and I caught the 16400 move. So my first trade ended up getting stopped out based off price. But then I re-entered. So again, you have this 50% of this low. So this is your overall low. That's your high. 50% of that is your entry point. So this whole area is just where you could have entered off of. Any given point you could have entered off here. Now what I did was I put my stop loss in an area of fluctuation. And that's what messed me up. And now as you guys can see, you see how these candles are now orange based off the 3-minute time frame because again, price broke structure. You had this low, you had this high, price broke it. 50% of this last high and this last low is this area right here. This is your demand zone. So you can enter anywhere in this area. Put your stop loss at the overall low, at the wick, or below. Now, to be safe, you probably should have had it right here. And I messed up in my first trade, and then I caught the actual move. And again, my entry is based off the lower time frames, but my exit point is based off the higher time frames. Always. It doesn't matter if my stop loss can be 3 pips. My exit point is based off the higher time frames. My exit point is going to be right here. First target is going to be 163,600, 700 area. The next exit point is going to be 16400. So really, I'm just going to target 16400. Why am I going to target 16400? Because if price is in an uptrend, it's going to create a whole new high. I jumped in on your color settings. Mind going back for a minute? I jumped in on your color settings. I don't even know what you mean. What do you mean go back? Go back to what? Not able to get it right for some reason. Get what right? The fibs? You talking about this? Just screenshot it and then just add the same settings. I don't know what you mean, bro. Just screenshot this. And then this as well, just screenshot it. It's the trend trader strategy. It's by H Potter. Oh, these fucking gnats, bro. I'm so sick of it. It's by H Potter. I don't know, man. I'm just gonna move forward. I don't know what you're talking about. I don't know what you're talking about, man. That's all I've shown. All I've shown in settings is this, the trend trader strategy, and my fibs. All right, where? So yeah, so now you see the breaker structure, right? You're seeing that demand zone. Price has gave you a demand zone. So we're already in the area of demand based off the 1 hour time frame, and now we broke structure off the 3 minute time frame. So now we have two areas of interest. So now we know that this is a high probability that price is going to go up. If we get stopped out, we just re-enter with the same directional bias. Exit point is going to be based off the higher time frames. First exit point is going to be 163,700. Second exit point is going to be 164. After we target 164, that's it. We're done. So the overall target is a 1 to 5. Go on to the next day. Next day, we're looking for the same thing pretty much. If the market's still in an uptrend, now at a certain point, the market is going to get exhausted and the market is going to shift sentiment. If it's not Wednesday, a lot of times it's going to be Friday because you'll have, if you don't have a midweek reversal, you'll have you'll have a reversal during Friday a lot of times. So at this point, I probably would have lost the trade. I'm not gonna lie, because you have an entry point right here, which price gives you 50% of the last low and high that got broken is demand. So if we look here, what happens? 50% of this last low and the high that got broken is demand. Price ends up closing here, but it wicks all the way down and fakes us out. Hits all our take profits, but we would have lost the trade. Now we could end. Now what I could have done was re-entered, right? If we scale down to the lower time frames, what I could have done was re-entered after price had broke these highs right here. So you see a high and you see a lower high, price break structure. Soon as price break structure right here, that's my opportunity to enter the market. That would have been an opportunity to enter the market right here. So you could have entered like right here, stop loss. You can just have like 20 pips and to just overall target just whatever you can get. So you see this resistance, you see the support that's now turned as resistance. So that can be like your form of target that you're targeting for like a 1 to 2. Right? But to be honest, this is a day that I probably would have just called it a day. Take a loss and then just call it a day. Unless I identify this trade right here. But realistically, you just want to call it a day. Now, let's say that the market is exhausted and the market's looking to reverse. So what I'm going to do is this. I'm going to be done for London session, but during New York session, I know that it's most likely going to be sells because again, Asian consolidation, London breakout, the New York reversal. So again, if the market didn't reverse during Wednesday, a high probability that the market is going to reverse on a Friday. So all I'm literally looking for is price to give me a break of structure towards the downside. So you see price failed to create a new high. You have a high, price failed to create a new high. Price is sitting at this area of support that's now turned as resistance. So all I'm literally looking for is a break of structure. So now you see a support, you see a higher low, and you see a break of structure. Now again, where can I find supply, right? If demand was 50% of the last high that got broken, then supply is the same exact thing, 50% of the last high and low that got broken. So how can I find supply, right? You have a 1 minute supply zone right here. The market already broke structure. You have support, you have support. So if you missed your entry right here, draw out another supply zone. This high and this last 1 minute low. 50% of that is an entry. That's one opportunity for an entry. Another entry is right here. 50% of this last high and this last low. Entry. Again, you see how price comes back to this area of interest but then drops because it's supply. Again, where's another area of supply? 50% of this last high and this last low that got broken is supply. Again, price breaks it, comes right back, and melts. These are all opportunities to get into the market. So on and so on and so on and so on. Again, here goes another clean one right here. 50% of the last high and the last low that got broken is supply. So this is the reason why it's important to understand this stuff. If you don't understand supply and demand, then you're missing out on just so much opportunity to be profitable. All these are areas to get into the market, and all you have to do is just have fibs. That's all you need is fibs to find supply and demand. 50, if it's in a downtrend, mark up a high and a low and wait for price to break that zone, right? So let's say price is like this, right? And you see price going lower, right? But you want to get a good entry. All you have to do is wait. All you have to do is wait. Let price play out. So you see this high and low that got broken, wait for price to break it and melt all the way down, and then when price comes right back to it, entry point. Enter the market. Entry point is going to be right here. Your stop loss is going to be here. And then you just target, get as much as you can out the market. Boom. Exit point. And you rinse and repeat it. 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 That's the same shit that you did on demands, you're going to do on supply. So I'm gonna show you guys examples of trades that I caught supply on, and I'm gonna show you because every trade I take I post. So I'm gonna show you guys a supply zone sell. This is supply, right? Again, you see how the market. This is all in the 15-minute time frame. You see how price is in a downtrend, right? The market is in a downtrend. The market is creating lower lows and lower highs. Now, what do you see? Like I talked about, 50% of the last high and the last low that got broken is supply. Market tanks for a 1 to 11 and actually goes for like a 1 to 20, which I actually caught was the whole 1 to 20. Now this is off the 5-minute time frame. 50% of the last high and the last low. Now I tried to enter off this supply zone. This supply zone didn't play out. I got stopped out. So what I did was I found another higher supply zone. I went to the next one. If this 50% of this high and last low is the supply, which would be an entry point right here, I was up like a 1 to 1 and then I got stopped out. I know that the trend is still in a downtrend, so I re-entered another supply. Now if this doesn't play out, then most likely we're going to reverse on the whole trend. But that hasn't happened yet, so I'm gonna still take sales. So again, this is targeting a 1 to 37, but I'm obviously not going to hold for the whole piece. I'm just trying to get as much as I can. So I ended up exiting out right around here at 158.560. Right? But again, you can see that my stop loss didn't get hit. So you guys can actually see 8.2 pip stop. You see it? Stop loss didn't get hit. Entry point, stop loss, completely melted. Why? Because price reacts off supply and demand. That's all price is doing, is acting off supply and demand. If you know the higher time frame bias, scale down to the lower time frames. Look, you have a low, you have a higher low, price break structure. This is all a trend line. So this day is the 23rd. Let's go to the 23rd on a 5-minute. Let's go to the 23rd on a 5-minute. Let's see what price is looking like on that day, right? So first though, we're going to go to the 1 hour time frame, right? The reason why we're going to go to 1 hour time frame because we want to see that trend. What is that trend looking like? So as we can see is this, based off the higher time frames, you have to decide, right? We have to see, okay, what is the trend? Before I take sells or buys, I need to see all the information for sells. I need to see all the information for buys. So for buys, I can't name one, but I can name multiple reasons why I should sell the market, right? This is the 23rd and this is during London session. So for one, the 1 hour time frame is bearish. Two, we're sitting at a resistance, right? So we're sitting at a key level and the market's in a downtrend on the higher time frame. On the 1 hour time frame, on the 4 hour time frames, we have higher times in a downtrend. Now, when I scale down to the lower time frames, we have lower time frame confluence, which means that the lower time frames is in a downtrend as well. And we're not in a counter trend move. We're in a downtrend. So you see a low and you see another high low. That low and the higher low got broken. So now all I'm looking for is just identify supply and demand. My first supply and demand entry was right here. I entered here. I had my stop loss here. This was my entry. This was my stop loss. And I was targeting all the way down there, right? I called a 1-to-1 like I said, and I got stopped out. So all I did was this. I waited for price to go higher, and I seen this next form of supply. 50% of this high and this low is what? Supply. Supply is sell. So 50%, when price came right back to this area of interest, I sold the market. Again, entry point is off the lower time frame. Exit always based off higher time frames. Entry lower, exit higher. Entry lower, exit higher. There's no point in getting the best entry just to get the worst exit. Why would I enter off here and have an 8.2 pip stop just to get out the market at the most recent form of support when we're in a downtrend? What happens in a downtrend? Price creates a new low. That new low can be for 100 pips, right? That new lows again for like 100 and some pips. So that's how I caught that 1 to 20. I exit out right around here. And I had like an 8.2 pip stop. So stop loss, this is basically what I caught. Again, I'm gonna show you another example right here. So we go in the hourly time frame. What do we see, guys? We see that the market is in a downtrend. You see that the market was at one point creating higher highs. 50% of this last low and last high is an entry, demand zone. Look at that shit. Price goes up. Where's your exit point? Right at this major key level resistance. Like this shit is not this. Yo, I'm telling y'all, like if y'all can just watch these videos, I'm saving y'all $1,000 on a course. No bullshit. Rewatch this video as many times as you need to and backtest over the weekend, and I promise you, this shit is gonna change the game for you. So this is your exit point. So you're like, all right, I'm done seeing buys. Now I'm looking for sells. Why are you looking for sells? Because this last support off the higher time frames got broken. If we have a break of structure off the hourly time frame, you best believe the lower time frames are following suit because they already did. Because of but what happens first? The lower time frames break structure, then the higher time frames. If you're on the hourly time frame and see that the 1 hour broke structure, then you need to understand that the trend has shifted and we're in a downtrend. All the lower time frames is incongruent with that session, with that trend. So what I mean is when you see price hit a major key level of resistance, you need to be looking for that 1 minute break of structure, that 3 minute break of structure. So let's go in the 3 minute time frame from this point. So what do we see? We see price at a resistance. Why is this not high probability for me to enter right off this resistance point and put a random stop loss? Because this is not based off structure. Price could easily go higher, wick me out, and then stop me out. Price ends up doing it here. Let's say you entered here, right? Let's say you entered right here, right when price got here. You would have got stopped out, and then price would have ended up melting. So again, wait for price to break structure. So this is what I'm gonna do. I'm gonna see that price is at a key level in the higher time frames, and then I'm gonna scale down to the 3 minute time frame, and I'm gonna be patient because what I'm looking for is this current trend off the 3 minute to break structure. There's a trend on every time frame. I already know that the higher time frames is sells. I already know that the market is most likely going to be sells because the higher time frames is in a downtrend. Downtrend is going to create lower lows and lower highs. But again, in order for you to make money, you have to also know the end. You have to have the direction and have the entry. And since we trade with stop losses, right? Because we're not idiots, we're managing our money, which means that we have to have a good entry and stop loss placement. The best stop loss is going to be based off structure. A 3 minute structure stop loss is better than a stop loss based off no structure. So again, this is one of the things in the military that they talk about. If you have the known and unknown, you always go with the known. If I know that I can scale down to the 3 minute time frame, wait for a break of structure, put my stop loss at the previous high, I have a high probability of price respecting that high than to me just enter price right at resistance point and just have a random pip stop loss. I know that the price has a higher probability of being right doing this, right, and waiting for price to come up and demand and supply, then it means just have a random stop loss. So this is what I'm gonna do. I'm gonna look at price. I still see price is bullish. I'm gonna be patient. This is all a breakout. I'm not entering this point. I'm waiting for price to come back up. Price comes back up. What did price do? 50% of the last high and last low that got broken is what, guys? Supply. So I'm gonna mark up my Fibonacci to get that exact structure to see what price is doing. 50%. This is my highlighted zone. Soon as price hits this area, I'm snapping it. I'm snapping the market. I'm getting in. Stop loss at the previous high. Now again, my entry point is always based off the lower time frame structure, but my exit point is always based off the higher time frames. Why? Because what's the point of catching just this move, right? Why would I only want to catch? This is nothing. I know that I'm with the higher time frame trend. The first time frames to break structures the lower time frames, which means that I'm getting the best entry. This is the best entry. This is the first entry. You are getting the best and first entry by trading this way. So why in the fuck would you only get out for 10 to 20 pips? No, you go back up on the hard time frames. You like, all right, look, my first take profit is going to be at 160. Next take profit is going to be at 160, 159, right? So if we hit 160, next take profit 159. Let's see what price ends up doing. Hits all my take profits for 1 to 15. This is how I trade. This is how I trade. And price ends up hitting this major support, right? And look where price reacts from, right? So 50% of this last low and the high that got broken off this hourly time frame. Look when price reacts to. Look at this. Price goes up and up and up and up and up and up. Now let's break down why price reacted to that area, right? Because again, the lower time frames and the higher time frames are all doing the same thing. So what we're going to look for is this 50%, right? So we're going to move this, right? The market was in an uptrend. 50% of this low and last high is the last pretty much demand zone. You have another demand zone right here. But again, this is like the last demand zone. But this demand is where price reacts from. So price didn't react to this demand. Price did react to this demand zone for only for a little bit. 50% of this high and this low is demand. Price reacts to it, it goes up. Then you have this get broken, this got broken, but then price comes all the way down here, and this price respects that. Look at this right here. Mark up your fit from here to here. Draw out this zone. Why is this so crazy that price reacts to this point? It's not, because that's demand. Price reacts off supply and demand. So now I'm just going to highlight this area as that's a key level that I want to get the fuck out the market. That is my exit point. Why is that my exit point? Is because that's demand based off a higher time frame, which means that that's driving the market. Those higher time frame supply and demand zones. So, that's something to pay attention to. The moment that happens is the moment I shift direction. Now again, 50%. Now price where price is at, so let's reverse it. The same way we looked at this buy, we're gonna look at where price can sell off. 50. This is the last supply zone. So again, we're gonna mark it out from here to here. Price is coming up to this level. Now we're gonna draw out our zone as this is a potential area where price can reverse from. This is a very potential area that price can reverse from. Why? Because this is supply. But again, we're not only going to just look at the market, right? We're not only going to just look at the market and be like, oh, just because this is a supply zone, we're going to sell it. The same way we wouldn't have bought here just because it's in the demand zone, is the same way we're not going to sell here just because it's at a supply zone. Now, how would have caught the buy, right? So let's scale down to it. Let's identify that. The way we enter buys is the way we're going to enter sells. So we scale down to the lower time frames. We see that price is already at a higher time frame structure. Now again, we're going to be waiting for price to give us a break of structure. What do you see? You see a support level. You see a low that fails to close below this low. Again, how do you spot supply and demand? 50% of the last low and the high that got broken. What do you see? You see a low, you see a high, 50% of this low and this high. Draw your supply and demand. I want to see price break structure. Price broke structure. Scale down to, like, let's say the 1 minute time frame, and you're gonna see it. So this is where I would have entered, and this is the first entry, and it's at a key level in the market. So you have a low, you have a lower low, price breaks, clears both highs, comes right back because that's demand, entry point, stop loss. Again, my take profit is what? Based off the higher time frame. My entry point is based off lower time frames. My exit point is based off higher time frames. So at this point, I'm not even exiting out the market until fucking the last second of Friday. Like, I'm not even going to exit. I'm just going to let this play out. I mean, me personally, I would have exited, but if you wanted to swing it, you could have, because it's a whole trend reversal. So you could have your take profit at 163. Boom. Take profit at 163. And then we're just going to let this whole thing play out. Boom. Take profit gets hit. That's how you catch big risk rewards. You don't catch big risk rewards by having a random trade setup and by just stretching it out. Doesn't make any sense. You want to see where price is at. You want to see prices at a key level. You want to scale down to the lower time frames. This is how you catch a big risk reward. You scale down to the lower time frames. For one, you want to see what the trend is. The market's in a downtrend. Then I want to look for a key level. Instead of doing something like this, entering at a resistance and having, like, let's say a 30 pip stop, which can get hit because that's based off nothing, right? And just targeting a low, yeah, that's decent. That's a 1 to 7, right? Or let's say you did something like that, 50 pip stop loss based off the early time frame, and you're targeting a 1 to 4 risk reward. Let's say you did something like this. Okay, that's cool. But again, how are we going to catch a big risk reward? How can we turn that into a 1 to 4 into a way bigger trade? Is by waiting for that current trend to break structure, waiting for this bullish moment to break structure, scale down to the lowest time frame you possibly can look for. Once that price breaks structure, you find your most recent supply and demand zone, depending on which the move is. If you're looking for a sell, you're looking for supply. If you're looking for a buy, you're looking for demand. Already to there is bigger. Just to this support level, this loan is bigger than the whole risk reward if you would have caught it from there. So anything more is a bonus. This is already a 1 to 6. All the way to there is a 1 to 20. And that's how I caught the, and again, the same move right here, I did right here. Why would I, why was this, why would I want to do this? for only a 1 to 4 when I can just scale down and get the same target, but just scale down to the lower time frame, right? Same target, but now we're just gonna wait for that break of structure at the lower time frame and catch that lower time frame supply and get that same target. Because 1 minute structure has to get respected the same way 5 minute structure and 1 hour structure gets respected. Alright, so I'm gonna show you guys more examples. We're gonna exit out the bar replay. But before we do that, let's actually go over now what we're actually reviewing in the market now. So let's review the market for next week. So let's go into 2 hour time frame. So let's see. So currently the market is technically still bullish off the higher time frames. And I say technically because the lower time frames are bearish, which means that we don't have multiple time frame confluence. So if the higher time frames is bullish but the lower time frames is bearish, I'm not going to take a buy, and I'm not going to take necessarily a sell either all the way. I'm going to take a sell to like a demand zone. You know what I'm saying? The reason why is because if the higher time frames is still not congruent, then I can't take it, right? Now, what can be an indication for sells is price coming back to here now. So we broke this whole, you see how price broke this level? So this whole time you see how price was reacting off demand zone, demand zone, demand zone, demand zone, demand zone. Price has been reacting off demand this whole entire time. Support, resistance, support, and demand. And price doesn't react off support levels, acting off demand zone. If it's not acting on support, it's reacting off demand. It is kind of honestly the same thing. But price ends up breaking this level. So price ends up breaking this level. So what we're going to be looking for next week is most likely sells, because again, price failed to create a new high. Price failed to new high, and then we have a break of structure, which we have here. We have a low, we have a higher low, we have a higher low. Price creates a new low, entry point. If you didn't enter here, and have a stop loss right here. So entry, stop loss. Again, take profit is based off higher time frames. Take profit 1, take profit 2. Boom, 1 to 4. And then again, if you didn't get that one, just scale down to the 1 minute and catch those 1 minute supply zones. And 1 minute supply zone right here. Easy. Found it just that quick. Where is it at? Where is it at? Where is it at? I found another one right here. I lost it. I think I see it right here. Yep. So what do you see? That's 1 minute supply, right? What is supply? 50% the last low and high that got broken. High, low, and again, all you looking for is price to break it, and then once price comes 50%, entry. And that's how you really get those big ass risk rewards. So what I'm gonna be looking for London session during Monday is most likely price is going to give a sell opportunity. Now, I will be drawing my supply zone. Most likely this one, if this one doesn't play out, and this is if the market is going to be sells, but it looks like it will. So if this one doesn't play out, then I'll be looking for this one. So if this one plays out, and then again, this is off the 15-minute time frame. So what you could do is this to have more of a confirmation is okay. You want to see price hits this zone, and then you want to see how price reacts to it. Then you scale down to the lower time frame. If you see that break of structure at that level, boom, you see that break of structure off the 1 minute, and then boom, you enter here, stop loss there. You could have like a fucking 8 pip stop loss and then just target all the way down to that low for like a 1 to fucking 12. Or up here for like a 1 to 15. Depending on the structure. If the structure is only 8 pips away, then that's where you put your stop loss. Boom, that's like a 1 to 15. So we're going to see how price reacts to these levels. So that's what I'm looking at. And if price wants to hit this resistance point, let's say price just wants to hit this resistance point and then drop, then again, I'm not going to sell it just because it's at resistance. I'm going to wait for the break of structure, right? Why sell it here and then just press sell when you have no confirmation besides, because again, support can get broken and go to supply. Supply, think of supply as like Black Friday. Think of support or resist. Well, this is resistance. Think of resistance as a sale, as an everyday sale is support. Oh, price instead of it being $100, it's $90. But think of Black Friday, right, as supply, because that's when price goes really a little bit higher to like right here, and that's like Black Friday. Those is how you get the big deals, and that's where you get the big risk rewards. Because that's like Black Friday. Think of supply as Black Friday. So order to get the confirmation for price to be at a support level and I would sell it, because this is looking like a head and shoulders now. But I would want to see that break of structure first. I would want to see price hit this resistance, and then I would want to see this current trend off the 30-minute, 15, whatever. I would want to see a break of structure. So what I'm gonna do is I'd scale down to the 1 minute time frame, and then I would wait for price to break structure. I would wait for price to break structure in the same exact way that price did right here. So history repeats itself. So look, right? The same way price hit this support level and then you hit the resistance and now you like it's a break and retest, right? Or this head and shoulders. You see this head and shoulder, you see the left shoulder, you see the head, you see the right shoulder. So now I'm gonna give you an example. So you see this, right? And you like, oh, I see a head and shoulders right here, and I want to sell it right here. So I'm gonna draw a circle. Everyone does this. They just sell it and just put like a fucking 30 pip stop, which is terrible. It's not terrible, but it's not the best thing you could have done. What I'm gonna do is I'm gonna scale down to like the 5 minute and see if I can identify break of structure. So I don't see a break of structure that well off the 5 minute. So I'm gonna scale down lower. Think of scaling down as glasses. It's like a magnifying glass. You're just getting more detail. So I'm gonna scale down. I'm gonna go back to the same day and I'm gonna look for a price to break structure. So now I can remove that drawing. Oh, hold on. I think I removed all my drawings. So now when I look at this, right, I see a potential head and shoulders, but I don't care about that. I want to see a break of structure. So now I'm gonna draw out my supply and demand. 50% of this high and like got low that got broken is what, guys? Supply. So I'm gonna draw out my high and low. I'm gonna highlight that area. And as soon as price comes to this area, I'm selling it. So this would have been my first entry. This would have been my entry. Stop loss at or above that previous high. So I'm just gonna put it at the high. Again, entry points are always based off lower time frame structure for me. Exit points are always based off higher time frame structure. Entry point is lower, exit point is higher, which means that I would have held this shit the entire time. The entire time. Because now it's like, yo, this we're seeing a major downtrend. So now I'm just gonna hold this shit. Why am I gonna close? Fucking flies, man. I got these flies keep touching my screen. So now I'm just gonna hold for the throughout this whole move. And then again, in order for me to take another entry, what do I have to see, guys? So what do I see off the 1 hour time frame? The same thing. Price is at a resistance point. There's another entry, but instead of just entering here, stop loss, random 20 pips, I'm gonna scale down to the 1 minute again. And it don't gotta be the 1 minute. It could be the 5 minute. I'm just using the 1 minute as an example. And I'm gonna wait for price to break structure. And again, I'm gonna use my fibs to find that supply and demand. Price doesn't react to this one, this one, this one, this one. No, this overall area is where I see price touch. As soon as I see that one, I'm just gonna enter. 11.7 pip stop loss. And stop loss at the overall high. Entry point is based off lower time frames. Exit point is based off the higher time frames. I'm gonna keep saying it so you guys get that. So you guys stop closing out your trades. Stop closing out your trades for just a 1 to 3 and 1 to 4. If you're with direction and there's no reason to close, then don't close. Close out at major structure, because the market is going to continue to go down and you're in the move. That one trade can eat up 10 losses, 15 losses. That's just going to make you that much more profitable. Now you add that with like asymmetric and some order dynamic form of risk management, and now you just have more of an edge in the market. Now again, now price hits that overall support. Now again, let's say you want to catch these buys, right? Let's say that you see price is at this form of support and you want to buy the market to this resistance for a counter trend move, right? So that's 70 pips. So let's say when the market opens up, and let's say it wasn't Sunday, right? And let's say the market was open. So if I wanted to do a counter trend move and I wanted to buy the market, this is what I'd be looking for, right? So if I don't use the RSI, but let's say I did use the RSI. If I did, I'm looking for a price to be oversold and I want to see divergence. So you see how you have divergence, price is creating lower lows and lower highs, but price is creating higher highs and higher lows. This is divergence. Now, if you don't use the RSI and you use the TDI, same thing. Price is creating higher highs and higher lows, while price is creating actual lower lows and lower highs. But that's not an indication for me. That's only an indication that price wants to reverse. Now, the next step is for price to break structure. Now, I'm going to draw out a clear level of support that price hasn't broken, and I want to wait for price to break structure. That break of structure is my confirmation that price wants to go higher. As soon as price goes up, again, I'm not going to buy it based off the breakout. I'm going to wait for price to retest, and then I'm going to buy the market. Stop loss at the low. And then I'm going to target previous form of take profit, which would have been this exit point. I'll probably just exit for like 1 to 4, like right here, and just call it a day. So GJ might even gap up to the upside. Honestly, we may see a gap up, but there's no point in trading it. Just wait till London session opens up. Now, let's say throughout Asian session and pre-London price is bullish. All right, cool. And you see prices at this major form of resistance. All you gotta do is just fucking have your zones and then wait for price to break structure from your zone. Don't sell it at your zone, because your zone is something that you put on the market. Everyone can't see your zone. It's just something that you have identified. It's just a tool. The zone is not it's just a tool. It's not fucking the end all be all. Just because it's a zone and price has reacted to it doesn't mean price gotta react to it again. You see what I'm saying? So it's not the end all be all. It's just a fucking tool. That's all it is. But if you have a zone like here, if you have a zone and price broke structure, if you have a zone like right here and price break structure, right, on the lower time frames, then you sell it and then you take profit here. But if that one sells, if that take profit gets hit, then you have another take profit. Or you just scale it down. Just scale your stop loss. Just trail your stop loss and keep trailing your stop loss. But GJ is a great pair to learn how to trade. It's a great break pair. Um, Price action is smooth. It's really good. So that's pretty much what I'm looking at. These are my zones that I have. So we're gonna look at the 4-hour time frame and just review. So anything that's not necessary, delete it. If price is nowhere near it, just delete it. You don't need to make this shit covered in zones because you're only looking for a week of price action because you're going to keep resetting your chart every week. You're going to start fresh every single week. So this is everything. I'm going to extend this out. That's a key level in the market. And that's where price is at. Price is at this big key level. Look what price did last time. Price pushed up from this point. When price broke above and retested it, look what price did when it was here. Price pushed up 400 pips. So price can literally just be reacting here to create the support and continue to go even higher. So that's the reason why it's so important that when you have a zone at resistance, you don't sell it just because it's at your resistance point. You wait for that break of structure off the lower time frames. That's telling you that, yo, we're ready. Think of the market as a dog. Your dog doesn't just tell you, hey, I want to go out. I need to go out. You pick up on the body language of your dog. Let's say it sits at the door. It starts crying. It starts pouring you. Maybe you train your dog to be able to, ring a bell. The market is giving you the same cues in the market that is trying to drop, right? You just got to know the market structure. You just got to know candlestick anatomy. So that way you don't have to be right. You're just reacting to the market. If more of your trades are based off reaction, you're gonna win more trades. But if it's based off you being right, you're gonna have days where you win a lot of trades. You're gonna have weeks where you win a lot of trades, and then weeks where you fucking go on a massive losing streak. So that's pretty much what I'm seeing for the week. That's pretty much my back testing for so far. So yeah, this level you can even see got tested all the way even back here. So this is a very key level. Oh my god, I just want to kill this fucking fly that keeps touching my screen so bad. So what I'm gonna do is I'm just gonna extend all this stuff out so I can just see how many times price have actually reacted to that level. So I can just see like, okay, like that's a very reactive level, right? Like this is a very reactive level. Touch. So these zones are very reactive. So this is great price action for next week. These are great zones for next week. So that way, if price continues to the downside, I'm gonna target here. If price breaks this level, I'm gonna target here. If price breaks this level, I'm gonna target here. And then that's probably gonna end the week off, honestly. If price wants to continue to go lower, now if price wants to continue to go higher, then I'm gonna target this high, and 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 then that's probably where it's gonna end the week off. Sorry, I keep getting distracted by these flies. And that's pretty much it, man. Same thing for right here. Oh my gosh, this is fly that keeps touching my screen. It's like these gnats. So I'm gonna do the same thing on this time. I'm gonna do the same thing on this one. So what I'm gonna do is I'm going to have two trading views. Open up this on my second screen. All right. So now I have my GJ chart on that screen. So now I can just copy what I'm seeing. Sorry, I just got these flies that keep touching my screen. All right, so let's see. I'll copy this, copy. and then I'm gonna paste it onto here. So this one is based off the 2-hour time frame. So I'm just gonna follow exactly what these say. So boom, we have it right here. That's a zone. Boom. We got this zone right here, I think. This is our, we got this zone. Okay. I'm gonna clean this up a bit. So now we got these zones right here. So now we got those two areas. Now let's look for another area. Another area is gonna be, we're gonna clone that. The next one I'm looking at is this one right here. I'm gonna clone that. The next one we're gonna put is right here. We're gonna extend this out just so we can see how many times price reacts and tests the level. So we're gonna do something like that, right? So now we got that level highlighted, and then we're gonna clone this one, put this right here. Then we're gonna clone this one right here. And this is gonna be at 16500, which is a quarter point level as well, which is this high right here. Then we're gonna put another one right here. And then our last one we're gonna have up here. And then what you can do is extend these all to the right. These are all extended to the right. And then I just reset them every week. So now all I got to do now is just save it, save my other one, and now all I'm doing is just waiting for price to react to these levels. These are all higher key levels. So now, and that's the reason why I don't have the 4-hour check, because I don't really need to be looking at the 4-hour every single second. I just need to be looking at the hourly trend. If the hourly is bullish, then I know, okay, I need to be looking for that 1-minute break of structure, and then I'm gonna use higher time frame exit points, which is based off the hourly and the 30-minute a lot of times, for a area of take profit. And that's how I trade. I keep it very simple. I keep it very sweet. For example, if the market was open right now and I wanted to look for buys, right? I'd be looking at the hourly time frame and saying, okay, are we at a key level? Right? If we're at a key level and the market is bullish off the higher time frames, or even in a counter trend that I see markets at a key level, even though we could be going opposite against the move. If there's enough meat on the trade, if the trade has enough meat on it to where I know I can catch a good risk reward, then I'll take it, right? Or if I think that's where the session is going to do. So if I think London session is going to be the opposite of the overall trend, I'd still take that move because I'm trying to make money right now. I'm not a swing trader. So let's say right here. So this is how I'd go about it. The price is sitting at a demand zone too. Here's the demand, which could be a lower high position to create, but also price is reacting off supply and demand a lot of times. So from here, like I said, draw out your zone on the 5-minute. You want to see a break of structure. So I want to see price break these highs, retest, and then I'll just mark up this entry point, stop loss. Don't go cheap on your stop loss. Put the right stop loss. There's no point in trying to put a stop loss in the area of fluctuation. There's no point in doing something like this if price can stop you out and be right in direction. Sometimes I make that mistake and it costs me $200 or $1,000 or $600 when there's no need for that. So put a valid stop. And that's it, guys. So hopefully you guys enjoyed this. So what we went over is everything for last week, that how you could have caught all these buys, and then we went over our zones and how to react to zones. Right? Don't sell it because it's at your zone. Sell it because it's reacting to your zone. For example, here, you see this sell right here? Instead of selling because it's here, scroll down to the 1 minute. And this might be a over example because price probably just hits that zone and sells heavy. But, oh, it's perfect. So instead of selling at the resistance point, wait for price to break structure. You have that breakage structure. And then sell it here. Look how beautiful this setup is. Right? So instead of selling it because price is at a resistance point, so let's review this. You see how price is at this major resistance? So let's say you want to sell the market and sell it to support. A lot of people are just going to sell it right here based off what the 15-minute or whatever is saying. But yeah, there's no confirmation that price wants to drop besides them just seeing a zone. That's a terrible setup. Yes, I see what you're saying. Yes, I see that resistance, but you drew that zone. You don't know what price is going to do. You don't have insider information. You don't know for sure that price is going to drop. So what's your confirmation? Well, I scaled down to the 1 minute time frame and I waited for the break structure and the directional bias of the trade I want to take. So if you want to take sells, look for lower time frames to break structure in the direction of sells. Then you enter when price gives you an entry. That's it. Based off supply and demand. Price is selling off. I see a trend line. So I'm gonna draw a low and a higher low. I want to see price break it. Now if you don't use trend lines, you don't believe them, you think they're bullshit, then just draw supply and demand. You want to see price create new lows and new highs, and then as soon as price breaks structure and is now showing sell opportunities, you take those sells. You enter off the first lower high position, which is right here. So you mark up this area of interest, and then you just wait. Soon as price comes to your area, enter. Stop loss right above. 6 pip stop. Again, my entry is based off lower time frame. My exit points are always based off higher time frames. So now I'm gonna scale immediately back up to the higher time frames, and I'm gonna target these lows. Now, for me, what I like to do is I like to target demand. So what I'm gonna do is I'm gonna draw out from here to here, and I'm gonna put my take profit right at that point right here. So now, if price does react to that demand zone and take off to the upside, which price does, it just goes a little bit lower, I don't get fucked over. So as soon as price hits this area, I'm exiting the market. I'm gonna have my alert set right here, and then I'm gonna go on a 1 minute time frame, and then I'm gonna be like, oh my gosh, wick entry trade. And that's how you can break down a beautiful trade, beautiful A quality setup. You guys practice this. You guys join my lives. Get into my Telegram. It's Sleazy Effects. It's right here in the description. It's Sleazy Effects. Go on to my YouTube channel. Go into my Telegram. Watch my old videos. If you don't want to watch my old videos, keep every time I go live, watch my lives. If you missed a live, watch the pre-recorded. And if you missed those, and if you don't want to do that, then I don't know what to tell you. But the information I just gave y'all, I'm telling you right now, is $1,000 worth of game. I'm telling y'all shit that like you would literally have to pay for. Like it's in courses. You see what I'm saying? And they don't even explain this shit. You know, because a lot of people don't even trade the way they supposed. They should really honestly trade. But like I'm telling you, the stuff that I just told you is like stuff that you would have to pay for. Literally, like if someone were to teach a course, you would have to pay for it. So I'm telling you, please watch this video. Back test it, and you'll be straight, man. Again, if you have a zone, that let's say you see price coming to this resistance point, right? Instead of just selling out the resistance, wait for that break of structure. Look what you see right here. You see a higher low, higher low, higher low, higher low, lower high, entry point. You can have right here, exit point, stop loss right here, target the support. Boom, that's another trade, bro. I'm telling y'all, man. Look. Anyways, man, we're gonna end it on this note. That was a great live Zoom. I hope you guys enjoy this information. But hopefully you got the zones. Hopefully you guys added everything you guys needed. And we're gonna end it on that note.